We're going to do a viewer request today. And a warm welcome to one and all. If this is your first time here, I am the coffee obsessed scruffy trader. It must be true, because it says so right there on my t-shirt. Because we all know Scruffy likes a coffee. He likes Wink as well, because Wonder Wink's here today. And what you're wondering?
Well, what are you going to get into? What are you going to come out with?
What do you mean? I'm as good as gold.
Oh, yeah?
Well, occasionally I am. She does look at the camera like a startled rabbit sometimes. Why? Because none of this is scripted, ever. And she's always terrified that I'll say something and she has to sort of answer on the spot. And she's like, oh, I'm going to kill you. And when the camera gets switched off, she does kill me. She beats me up and all sorts. She's terrible. And to give you an idea of my favourite hobby, I'll tell you a little story before I do this. Because she is looking there thinking, please no, please. We went shopping the other day. Well, we go shopping quite a lot because she says I have to. And one of the best games you can play when you're walking down the street, and certainly in a crowded area, is something called Shock Chat. Right? If you've never played Shock Chat, it's fantastic. Right? Basically what you do is you walk ever so normally into a crowd of people, and you know how people always sort of look, and you might get a second glance of part of a conversation, and then you think, oh, I wonder what they were talking about. You know, the sort of thing like, yeah, Mrs. Jones, she was coming out at 34. And then that's all you've got. And then you've got to wonder why she was at number 34. Was she being naughty? Was she skiving? Who knows? We don't know. You know, might be having a little quick drinky, or might be saying, buckle my shoe, let's go upstairs and play 2-2.
Oh, that's disgusting.
All that sort of thing, right? It's just what runs through your mind. Right, so you've got the image. Well, I take it a little bit further. And she gets terrified all the time when I play this. And the last one was a fantastic one. Because we're walking down, there's a few old girls walking towards us. And I just turned around to her and just said, yeah, they were dead, but I got the dildo. And then just kept on walking. And you should have seen the look on the old girl's face. She nearly had a heart attack. And then I got a black eye because she kicked off.
You didn't.
She does. She hits me all the time. You know, right here. All right, you don't. What are we doing? What are we doing? Sorry. I'll flick this over, and it is a request from Del, and I hope I've pronounced that correct. One of the squad members, and if you want these sort of things sort of made into a video for you, etc., there is a super thanks. So click that and I'll always put priority to it. Wants to understand support and resistance, pivot points and moving average and the combination between them. And it's actually quite a good thing to look at. So let me kind of show you and illustrate on the DAX. Now I trade this all the time. You saw the video earlier on this morning, you'll have seen I did okay out of it. So I don't really need to go back to market, but I often feel compelled to do this. And I like the DAX because I trade it all the time. Now the guys in the squad know exactly how I get these levels. They are drawn in quite a unique way as to how to find the key turning points of the market. So if I get rid of these sections just for now, so all we're left with is S&R lines, S&R support and resistance. Some people call them supply and demand, zones, whatever you want to call them. To me, they're just points of attraction and areas of interest to work to. That's it. You know, why? I know they've had a reaction in the past, therefore they can have a reaction in the future. A little bit like playing shock chat with her. She knows I've done it in the past, and she's pretty sure I'll do it again in the future.
I'm
Is that
certain
right?
you will.
Just you wait, you get me in that airport. But we're all excited because we're going on holiday, and she's all excited. So, and you know what she's ordered? She said she'd order a bikini, boys and girls. She said she'd order a bikini. What colour is it?
I have decided yet.
We already know what colour it is. She said she would do it.
Hello.
I'm so excited. I am. Right. Let's have a look at this. You laughing at me?
You're easily sidetracked.
I'm easily sidetracked. No, I was not. I am perfectly sidetracked. Right. So, let's just get my little noggin out the middle of the screen. There we go. So that I can have a workspace. First part, 100 moving average. Well, you have a smooth, exponential, etc. It's fine. So if I take the 50 off and we make that into something that's reasonably thick so that I can see it, you can see the market is trading below the moving average, but it is clearly moving up, and we've got key levels in between. Now the thing with the moving averages, and this is where some people get caught with trends, etc. They say, right, if it's below the moving average, I'm only going to sell it. Right, that's fine. But when it's quite far away like this, you're really buying or selling at its extreme. So what you would be looking for in this instance is not going with the direction of it is under, but as in going back to. So your direction is actually the opposite way. And a way around this, you can use a pivot point. So if I pull a pivot point on, just like so. Now that is a daily pivot, and you can see that it's bouncing around. It's had no attempt to go up there, and it is also had no attempt to go down there either. So how do we look at this? What do we take away from it? A moving average will always try, and if I find midnight, which is here, just drop this in. Excuse me. Right. That's the start of the new day. Okay. This candle, that's the midnight candle, so it'll be on that side. Okay. What it tries to do is pivot around these certain points. Now, if it's holding below, then you look to go to the next level once it's bounced off a pivot point. All right. So it's found its way to the pivot. We're now looking to see what it can do. All right. Now it's at a key level, which is here. So from there to there is reasonable when it closed above that way. If it is sitting below the pivot, then it's down here. It'll work its way to the next level and the next level, because its trading arena is these two bits here. But that's based on a daily sort of time frame. It's quite far. So let's tighten this up a little bit for a day trade. Well, if I take it down into a 4 hour, creates a different type of situation. What we're looking at is the same principle. It's coming to the pivot. So if it holds above, it can then work its way back to this moving average. Why is that? Because we've identified that it's on a massive stretch point. Look at the distance between them. And this is all on an hourly, guys. So big stretch. So if you measure that out, let's measure this down. So broke it down there. It moved down 410 and then snapped back. All right. Well, let's have a look at this. Well, if we're looking for snaps, this is absolutely massive. It's humongous. That's 600 from that moving average. It can't sustain that move for long. You know, it's unknown. So we look to see what the structure of the market is. Well, it's clearly moving up. So if it's rejecting the bottom here, it means it's going to try and get back to the moving average just as an equilibrium, if you like. And that's the 100. Okay. Now, to make this a little bit easier, put the 50 on. Right, okay. So now what can we see? Well, you can see that the overall trend is kind of downwards here, but this part of the trend is moving up. So the convergence point is here to R1, there and there. Now you look for pockets of air constantly. It's always a pocket of air. What's a pocket of air? Well, it's the gap from there to the next point. So in this case, we've got all of this area to work with. All right, so if that's pushing up, pushing down, moving up, use the pivot as an entry point to get into the top section. Now we know it's possibly not going to hit this high. Why? Because we've got two major roadblocks in its way in a downward move. But we are heading upwards according to this move. So where's our target point? Well, it's very simple. If we're entering here, it's here. And if we're entering here, it's here. And we're just working between the pockets of air based on the information we can see. So if I take this down into a 15-minute chart and we can have a look to see what's going on, you can see that the moving average dynamic has changed. It's tried to push down. It's using the pivot as a kind of a support area. It's also using this moving average as a support area. So the next part of the puzzle is getting over a hump. So the actual entry point is probably above this section here. Why? Because it's out the way of a roadblock, out the way of a roadblock, and then a clear run to there. Then you do the same process as a clear run to there. I hope that kind of makes sense. So it's breaking through now. So let's drop down onto a 5-minute chart. Just like so. See, it's above the moving averages. I already know the other one is above the moving averages. And then we can start looking to get into this quite easily. And how do we do that? Well, bear with me. I shall show you. Okay. So, let's have a look. So that's bouncing there, that's bouncing there. Just going to put on a basic indicator. In this case, it's going to be the MACD. Standard setting MACD. It's got a cross there telling you it's pushing up. And we also have a push up here. Just want to quickly come back here. Again, it's telling you it's pushing that way. Drop it to a 15-minute. And it looks like it's going to try and cross again. So, yeah. Here looks to be the reasonable place to be based on a 5-minute chart with an hourly bias. Okay. So what we're going to do is we're going to look to see if we can get maybe 5 or 10 pips into the market. Just let that go down there. Just drop that onto there. And we shall see. Okay. All good. All good. Right. Let me run this out. Don't need any of these indicators anymore. Don't need that one, and I don't need that. All I used the MACD for at this point was I wanted to confirm it on the hourly, and I wanted to confirm it on the 5 minute, which was my trading chart to get in. And then I just needed to know I had enough space between the entry point and there. And if I was doing this earlier, I'd probably try to get in roughly around this point. Why? Because that's when the MACD was sort of moving. But there we go. Let me run it out. And that was that. We done. So 138 quid going up into that zone that you've just seen close out. So what was all that about, and why was it important? Well, it kind of shows the importance that one direction is not always set in stone. Just because it is underneath the moving average doesn't mean to say it's going to stay that way. The markets are dynamic. They move backwards and forward. It's kind of why a Bollinger Band works so well, because it will show you the extreme point in the market where it's going to snap back. Now on a lower time frame, not so much, but if you're on a higher time frame, they work quite well. Now what it also shows is that if you have a basic structure of the market in place, support and resistance, in this case key pivots, and then a moving average to work towards, what you're doing is you're making a choice and a decision, and then using those as bounce points between two areas that create a pocket of air. And it's that pocket of air that's important, because if you're wrong, well, you just kind of cut your losses, you get out. But if you're right, you know roughly how far it's going to go before the next kind of wobble point in the market, if you like. And it doesn't matter what that wobble point is. If it's a strong support and resistance, if it's a Fibonacci, if it's the top of a Bollinger Band or the middle of a Bollinger Band, a moving average of your own discretion, it can be a 20, a 50, a 100, whatever. What you're doing is you're filling the void. So I hope that makes sense, and I hope that genuinely helps you, Del. I genuinely do. Deli, it might be. I really hope I haven't butchered your name. But keep the requests coming, and I'm happy to do it. And I'll always try and do it in real time, because I don't like retrospective charts. Hindsight's a wonderful thing, and anyone can trade a move that's already been done. But doing it in the moment, well, that's a different kettle of fish altogether. So do subscribe if you want to see some more. If you want to contact me, all my details are in the description, as are some good links. If you're looking for a good broker, there is my recommended broker, which is BlackBull. Very tight spreads, low barrier to get in. And there's also a 5% discount off the 5% as prop fund. Just stretching your pennies out a little bit further, guys. So as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.